When we look at the earnings and we look at it come out, what is the JPMorgan distinction? As you look at the 30 and 40 banks that we cover in New York, what separates JPMorgan apart?
Their 19% return on tangible common equity. I mean, they do have good profitability metrics, and that gives them the ability to return capital to shareholders and invest. Looking at the first read of the headlines coming out right now, they're in line for net interest income, and that's one of the things we wanted to see. Provisions for credit losses are a little high, and people are worried about that moving forward.
Naira, what do you see, please, in London?
So I'm looking at the second quarter EPS coming in at $2.82, so a beat on the estimate, or rather versus, excuse me, the $2.29 year on year. Sonali, what do you make of that? I mean, I think we're waiting to see how the sort of trading units did. Do we have any read on that yet?
Well, we knew they were going to be down. It's coming in now. I haven't caught the trading numbers quite yet. But we're going to want to see, by the way, from Citigroup yesterday, I've got to say, I would look at debt capital markets revenue as we're looking through this, because that's the one place that Citigroup was up yesterday. And so we're going to want to see that across the board for all of the other banks as well.
Right now, out of JPMorgan, Mr. Diamond saying the usual. We had a strong second quarter, a diversified global business model in corporate investment bank. Market performance was relatively steady on slightly lower credit volume. Thomas showed with us, and Tom, a single headline that I find extraordinary is 4.1% revenue growth year over year. I mean, there's always some noise here and there, but the fact is that's a pretty good number.
So we had been looking for 1.9% on an operating basis. So we'd love to see if there's any non-operating type items that are in there. For example, TradeWeb was a big investment in the quarter. Don't know exactly what JPMorgan's position was there, but that's on the headline number, looks like a strong number.
And also, Sonali, a meaningful increase to our dividend and repurchases. I mean, that's the story for this year for all these banks, isn't it?
It's a story for the banks this year, but we already knew it. Right now, average total loans up 2%. Like Tom was saying, that is much lower than the first quarter and certainly lower than a year ago when we saw 7% growth in total loans.
Sonali, so we were waiting for that trading headline. The second quarter equity sales and trading revenue coming in at $1.73 billion. The estimate was 1.82, so it is a miss on the estimate. Second quarter investment banking revenue, $1.78 billion. The estimate, 1.81. So a little bit of a miss on both those numbers. Yet on the Top Live blog, I'm being told the first look is a positive one and shares are starting to climb. Is the first look a positive one if you look at the trading numbers?
If you look at the trading numbers alone for equities, it's not too surprising. JPMorgan has one of the biggest equities businesses, so we expected it to be hit hard, especially from the trading commentary we heard from Citigroup yesterday. It was cash equities and prime particularly hit, so that would hit JPMorgan. I think what investors are kind of happy about right now is fixed income is a little bit better than expected, and across the street, that's something that we wanted to see better figures of after such a poor environment for many people.
Yeah, that makes sense. Tom, you had your eye on the net interest margins. JPMorgan sees, it's just coming through now, red headline, its year net interest income at about $57.5 billion. It saw at least $58 billion. So that is the red headline hitting the tape. It's cutting its year net interest income view. Your take on that, your first take, Tom?
Well, we were looking for the net interest margin to be 2.46% in the quarter. I'm not sure where it came in the quarter, but like I said, I think the language in the conference calls and the outlook going forward is going to be an important driver for how investors think about where to take earnings estimates.